What's up YouTube? Dougie Chong here. Welcome to today's episode where I'll be reviewing RioCan Stock. To start things off, I want to say happy Thanksgiving to all my American viewers and happy Thursday to everyone else. I really appreciate each and every one of my viewers, and if you don't mind hitting that like button and subscribe button, it really helps my channel out. Alright, now let's get into the stock analysis of RioCan Stock. For those of you that do not know what RioCan is, they are the second largest real estate trust here in Canada, and they hold roughly $16 billion worth of properties, primarily commercial retail properties. So this is a great stock to buy if you want some exposure to the red hot Canadian real estate market, but don't want to put all your savings into a down payment. The company was founded in the year 1993, and an interesting fact is that RioCan stands for Retail Industrial Office Canadian. They don't own a lot of big name malls. They own the Lawrence Allen Mall here in Toronto, and they own the Chapman Mills Mall, I think it's called, in Ottawa. I have lived in both of these cities, and even then I had to kind of look up exactly where both of these malls were. The business model of RioCan is pretty simple and straightforward to understand. Unlike these new tech or subscription service companies, RioCan just owns properties and leases them out to retailers. They have a good policy in place to never allow any one tenant to make up more than 10% of their overall rental income. This makes it so they are not overly reliant on one tenant. Since the business model is fairly simple and easy to understand, doesn't need much more innovation or many more dollars put into research and development, it makes a lot of sense that they put a lot of the profits back into the shareholders' hands in the form of a dividend. The primary risk factor when it comes to the business model of RioCan is obviously if their tenants are unable to continue to pay rent. This played a huge factor when large retailers such as Zellers went bankrupt here in Canada, or when Target decided to leave. When large players such as these leave malls, it can be absolutely devastating because the vacancies that they create can be left empty for years. Not every retailer needs as much space as a store like Target, and it is very hard to maximize the use of such large spaces. So these vacancies that can stay vacant for sometimes up to a few years really hit RioCan's bottom line. Thankfully, a lot of RioCan's top tenants are essential services that will continue to have money to pay rent, such as Loblaws and Sobeys. These businesses have largely been unaffected by the whole health crisis and arguably have seen a boost in sales since people are unable to eat out as often. Some of the worrisome tenants I see on RioCan's list are things such as Best Buy and Cineplex. Best Buy isn't as big of a worry, but Cineplex comes in at about 2.8% of revenue, and I do not see the future of Cineplex as being very bright. Now let's take a look at some of the numbers. The one-day chart looks pretty flat, trading at $18.25 at the end of today. Past 1 year, it looks way down from its highs of around $27. It has since recovered a bit since its lows around $14, but still not to that mid $20 region. The 5-year chart shows that it was relatively stable in that mid $20 region until the recent events of 2020. And it very well should be a stable stock since a lot of its tenants are stable, essential services. I think that this stock got pretty unfairly hit when this whole health crisis started, and all stocks just got dragged down with it. It's not like Air Canada, which had to hold pretty much all air travel and lost something like 90% revenue year over year. But granted, Air Canada stock did drop more at about 75% as opposed to just 50% for RioCan, but still I don't think that huge drop was fully justified. The dividend yield is what will attract a lot of investors and sits at a whopping 7.89% today. That is a pretty big yield, and I'm kicking myself for not getting it when the yield was around 10% just a few weeks ago. It's still at a fabulous price today, and these uncertain times are the perfect time to start a position if you have not already. As Warren Buffett used to say, be fearful when others are greedy, and be greedy when others are fearful. Its market cap sits at $5.8 billion, which shows how big of a company it is. It's kind of crazy how $5 billion can be seen as small, with mega cap tech companies having huge valuations in the trillions of dollars these days. The PE ratio of this stock and all other REITs kind of confused me. It sits at a staggering 268, which is much higher than the average company, but is somewhat normal for a real estate company. Now let's take a look at their balance sheet. Their balance sheet looks pretty solid with about $15 billion in assets and about $6.8 billion in liabilities. Also, the assets and liabilities look pretty consistent over the years, which is nice to see. So is RioCan Stock a buy in my opinion? As you might have guessed, I'm gonna have to say that RioCan Stock is a buy here today. Their stock is quite lower than its all-time highs, and it was just unfairly hit with this whole health crisis. Their tenants are a lot of essential services, and I think this stock can continue to grow and be at least stable or what it was before this whole crisis started. That almost 8% dividend is just a huge stable payment that you'll get each and every month. So I bought some shares here today, and I'll show a screenshot of me buying it in my simulated account. Again, I don't buy too heavy to start. I buy a few shares, and if the price goes down or stays the same, I will continue to buy more in the future. Also, I'll be a little bit honest, with the market being as hot as it is, I've been feeling a little bit of FOMO recently, fear of missing out. I've left a little bit too much money on the sidelines, and will be looking to put more money into the market in recent times. I'll be searching for those stocks that haven't already taken off. A lot are already recovered or at pre-health crisis levels, but there are still a few, like RioCan, that have not fully recovered yet. That's it for this video, guys. Thanks a lot for watching. Let me know what you guys think of RioCan Stock in the comments below. Leave a like if this video helped you at all, and don't forget to subscribe if you have not already. Enjoy the rest of your day, and see you in the next video.